What's going on, guys? Welcome back to the channel. Welcome back to another video. Today we're going over the price action on NAS 100 and we're going to look at the overall picture of the market. So yesterday we had a very exciting type of price action. It's been a while since I've seen one of those long candles, one of those big drop offs. I've been saying it, the market has been going up and up and up. Everything has been going up and up, and finally now the catalyst behind this 3.5 or almost 4% drop on this is Mr. Trump himself. Came out and said he's increasing the tariffs on China to 100%, and it just came down hard, on a Friday. But nevertheless, I didn't get affected by it, but a lot of people lost money. A lot of people, I'm sure, would have wiped out their portfolio if you bought within the last couple of weeks or so, and or your portfolio would have been shaving off, especially for crypto and all of those stuff. Because the market always overreact to this type of stuff, but you know that's just a part of the game. But let's get right into the technical aspect of the market. So yesterday, the day before, we had a push up and then we came back down close. So we sold off, and then in the afternoon part we kind of just push right back to trying to get back up. By the time the market closed in the afternoon, the overnight session kind of brought us back up to the highs. We didn't quite make it there until in the morning. We just kind of ran up and we swept the highs. I was expecting that we would have gone up, but not that high, and then I was expecting to continue to sell. Not that big drop, because I was seeing this as a low, and then this one maybe if we were continuing. But I was still saying, because we're in a bull market, we're going up, so it's possible that we just come down, and then we were respecting this gap here from the market open. So we came down into it, and I was saying we could go back up just the same, because I always try to be objective. I don't try to really predict the market like that. But that's what actually happened. So we just came down and dropped on the news, and it's the same thing happened on the S&P 500 and on gold. We kind of just went back up because we were pulling back a bit. I didn't take many trades. Well, I didn't take any trade really yesterday. I took a trade on gold before I went to work, but I got stopped out, and because I didn't get the best of entry. But I'm going to go over where I could have gotten in and thing. But back to the Nasdaq, we took out all of these lows coming down, and I'm thinking we might gap down going into next week, being as this thing going accelerate. That's what I'm thinking. And going down to the 4-hour time frame now. So on the 4-hour time frame, we traded up from the gap. So see the gap here from Thursday night. We kind of gapped up, and on this time frame we just kind of moved sideways before finally pushing up. So this is actually during the New York Open that we actually came up and ran these highs. So hold on, let me actually reconfigure the settings, see if I can get the lines to go back a bit more. But it was a crazy drop. Let me see if I can fix this. need the lines extended back to the left a bit. Well, it seems like it can't go back anymore, but yeah. So we on this is the daily time frame. This is the 4 hour. So we have based on the ICT principles, like the Thursday would have formed the higher the other week if we didn't get a next run here. So we had this run here and then we just dropped. So it's a big drop. So we took out all these lows coming down and didn't even have much of a reaction in these zones. But on the 1 hour time frame now, this is what we look like. So let me see, load templates default. So all the lows got run. If you were buying, you would have been in trouble. So we took out all these lows. You realize there are no levels here. The indicator remove all of them because they got run through. So the only ones that are being respected now are these new day opening gaps. So we can come back to them. So this is now equilibrium. Premium is all the way up here, and we're currently sitting at discount for this time frame. So we can come back up to here and then drop again, or we could just gap down and continue going down. So currently I'm thinking we might gap down and continue selling, and then during the evening session or the overnight session we might try to retrace back up. But on the open I think we might just gap again. But let us see if we get any more escalation with the tariff situation or anything like that. So see here we at the open, the let's see if I can so yeah, we are the open here. I don't think this is showing me the correct price because it's actually saying this is New York here, because every time it's on the weekend this indicator tends to do that. But let me actually make these lines a bit bigger. Because this is MT5, guys, this is not trading view. So see if I can change the one for the previous daily close as well, just to make them a bit more visible. So previous daily close, you can set them to 2. Just resaving that, setting it there, close, boom, and resave the template, put it to default, and that's it. So yeah, now we can see the previous daily high properly. So the previous daily high was right around here. Let me go on this one and load this one. I was actually looking at the wrong chart. Yeah, so this is the correct chart. This is ES and Nasdaq. This is Nasdaq. So if you notice, I didn't take any trades on this one today. Didn't take any trades on this trade, on this pair. So the previous daily high was this high right here from Thursday night, and we didn't get to close above it. We just ran it barely ran it during the New York session, and we just dropped from there. So I'm expecting us to continue dropping, or we could retrace back up to equilibrium. But I see where I could have gotten an entry here after we ran the highs, except for the fact that we in an uptrend. So I was looking at this gap that we were respecting, and I was at one point in time I was going to take a buy here, but it was a little bit too late because I had missed the ideal entry. So there was a macro here, and price had already gotten to about here by the time I got up, and it came all the way up, come back here, and then we went up. I would have probably closed out most of it by the time we got to these highs here. And when I realized that this thing coming back down, I would have maybe entered after the sweep and this drop to here. I was expecting that we could drop if we roll over, but I wasn't expecting more than this low. The previous daily low, which would have been this candle right here, or even further down to this new day opening gap, but not this big sell off that we have. This is over 3%, almost 4% drop from the highs. So this is a significant sell off. Using my technique, most of these came inside the macro. So this happened right in the 10 a.m. candle. During the 9:50 to 10:10 macro, I could have gotten an entry there, and also down here I could have gotten an X1. So let me go to the lower time frame now and point out where I would have gotten in. So same chart, just this is on the 5 minute. So right here was a high, right here was a high. And if I go to trading view, going back here, see I show you everything is red. All of these red. All the indices, everything sold off. Gold is the only one going up, and even the even oil sold off. So let me go to the chart. So let me remove this. Can go back to here. So see, it happened right inside the macro. So this one was from the 10:50 to 11:10, and the first one was right in the silver bullet right around here. So there was an entry here, an entry here. This one was a bit quick, and we had a nice little gap down here. This could have possibly been an entry right around here or here, and this one would have been a little bit better because we had came down, swept some lows already, and then we retraced back to a little bit, just retracing back to a little bit of a fair value gap here, and then we could have entered on this candle here, as well as it was just before lunchtime. And then this candle now right around the 110 to 140 macro, right before the PM silver bullet, we got another entry here. And then during this time frame around here, we got a few entries where we could have capitalized, because once you realize that we're going down, then you just flow with the right hand side of the price. So I have my entry techniques, which include the PO3 and the inversion, and then I combine the time element to it, and that is how I could have gotten into those trades. So as I said, it was a pretty significant drop off. Let me now show you the trade that I took on gold. So on gold, this is what we look like. Template. think it's a default. This should be. And gold, I was actually looking at, turn on the history. So actually it was the previous day that I took the buy here. Yeah, I took the buy here and got stop out. But I was looking at this. Yeah, I was looking at this. When we came down to here, I saw where I could have gotten an entry off this order block. And during it came down right inside of a macro. Right inside of a macro. And as well as this was inside the macro as well. So when I saw the price, it was the previous session. So this is before midnight. This was inside the macro. Right around here, you could have caught this buy and held it for the entirety of the day. It was in this order block as well as the inversion plus the PO3 and the macro. A whole lot of different confluences to get in. Here was another entry as well, and here was a third entry. When I go to trading view, let me remove this. Show you where, see, it actually aligns perfectly. So this is where I took the trade. It went into a little bit of profit and it came back down and stopped me out. I moved up the stop a little bit and it just stopped me out. But I should have just took it as a scalp. I was just aiming for this high right here, but it didn't quite make it up there. So as I said, this macro during the London session would have provided the ideal entry right around here. So this entry as well as this one during the 950 to 1010 macro would have provided a decent entry to run these highs. We came back down again, and another entry here would have been 250 to 1250 to 110, or during the silver bullet we got a next entry to go back up to the highs. But I wasn't on the chart any of these times right around here. This was where I was up, and by the time I get to here I have to be at work, so I didn't bother to even try to force any more trades. I just left it. So that is really it for this video. That is really it. Until the next one, I'll catch you guys. Thank you for liking and commenting and subscribing.